Good afternoon, and welcome to day 14 of Practical English for Finance and Banking. So this week we have been looking at Unit 2, which is called Banks, the Basics, and we are ready for the last section, which is Part C. So these are pretty simple, hopefully, but maybe some new vocabulary or concepts here. So let's just run through these. And this is talking about if you're opening a Grimley's bank account, a current account, which, as I mentioned, in the US, we would call a checking account. Checking account is one that you have frequent, easy um, access to for your basically your daily banking transactions, where you make deposits of salary or other money that you receive, and you would make regular transactions or withdrawals for your rent, your gas bill, electric bill, phone bill, car payments, insurance. Uh, you might use a debit card that accesses that account. In the U.S. and other countries, you might write paper checks, which we will look at in more detail. We talked a little bit about those. We'll be looking at those in more detail in the future. But the checking account is your your everyday account. Okay, it's the one that you use and access frequently. Okay, so number one, and these are the terms and conditions, kind of the rules for your bank account. So they're telling you what to expect, what you need to do, and what to expect. So number one, regular bank statements will be sent to you by post. Post, what is that? That is simply mail. Oop, regular mail. Okay, that's why when you send a letter, you send mail, you go to the post office. You could say that you post a letter. I would say in the U.S. that's the only person I've ever heard that was a much older woman, uh, 30 years ago. Most people just say they mail a letter or simply send a letter. Um, but if it's sent by post, that means through the postal service or through the post office. Okay. Nowadays, of course, most people might receive a statement by email or just simply checking online on the bank's website. Okay. With my banks, with my actual bank or my credit card companies, I can, a lot of them have an option to go paperless, which means that you decide to receive those statements either by email or simply by logging in to their website. Okay. In the US, that's still an option you can choose. If you do not choose to go paperless, then they will send you in the mail a paper printed statement. Now, a bank statement, what does that show you? What will that list? Payments, events, or transactions? That will show all of your transactions. So, what are the transactions that would appear on a bank statement? The transactions that you will see, most basic ones, deposits, whether that's a cash deposit you have made, or somebody has sent you money, or if you have received your salary through that. If you've gotten your salary directly deposited into your account, in the US, we call that direct deposit, where your employer puts that money directly into your bank account. And that's pretty common now. Not everybody uses it. When I was younger, I would get a paper paycheck from my employer. Whether we were paid once a week or every 2 weeks, we would receive a paper check, which usually most places you would pick up at your workplace because that was faster than sending them through the mail and also cheaper. You would just stop by the personnel office and pick up your check on payday, and that's what we called it, payday. The day that you receive your income, your pay, you would stop by the personnel office and pick up your check in person. Um, Now, most companies have some sort of direct deposit system set up. When I first came to Korea, I actually received my salary in cash. So imagine that. And that was before they had the 50,000, one more zero. That was before they had the 50,000 won note. That's fairly recent. So it was all 10,000 won bills. So on payday, I would get a stack about that big of 10,000 won bills. And then I would stuff that in my pocket and walk home at night. I really didn't like that because it was a lot of cash. It was my entire month's salary to be carrying home. Um, so anyway, uh, on your bank statement, it would show deposits. It would also show withdrawals, payments you have made. Again, rent, car payment, insurance, bills, credit card payments, any money that has gone out of your account. It would show any bank transfers, transfers coming in, transfers going out, which are deposits and withdrawals. It would show if you've earned any interest on your account. Um, a lot of checking accounts have some sort of interest. It's usually very low, but it depends on the account. Some accounts, if you keep a high balance, 5,000, 10,000, $100,000, you'll earn more interest on that account. So interest that you have earned would show up, as well as fees, charges, um, ATM fees, uh, overdraft fees, which we'll be talking about. If your balance is negative, you would have a fee, a charge for that. Um, some accounts charge a monthly like maintenance fee, just like credit cards often have an annual fee just for the privilege of having that credit card. You might pay an annual fee. Some checking accounts have a monthly fee. They might call it a maintenance fee. Account, maybe they might call it like an account maintenance fee. That's simply they're charging you just to have the account. An easy way for them to make money. Now, when I did a lot of banking in the US, sometimes banks would have what they would call like totally free checking, where basically there were no fees. If you had like a negative balance or you wrote a check that you did not have the money for, there were fees, there were penalties. But there was no maintenance fee, there's no monthly fee. Okay, so all of those things would show up in your account, in your on your bank statement, whether it's printed on paper or online, or if they send it like as a PDF file through your email address. or of course by regular mail here. Number 2, new current account customers can borrow up to £200. Remember the kind of cursive L, cursive L. Cursive is like handwriting, okay? Um, Script, we might call it, which is the type of writing where all of the letters are connected, like a looping, curving kind of thing. So it's a capital L here, basically. New current account customers can borrow up to £200 in the form of a low interest overdraft. An overdraft is basically an instant loan. Uh, it basically means if you, sorry, let me go over here. If you withdraw money from your account, you take money out. If you overdraw your account, that means you basically you take out too much money, either by writing a check or doing some sort of transfer or having money taken out from uh, an automatic payment from rent or like a car payment or house payment. Uh, and so it's possible to end up with a negative balance, which means you overdraw your account. You withdraw too much. Okay? An overdraft is basically a loan that if you overdraw your account, here you would have, in this example, you'd have £200 of available credit that you could access. Now, if you overdraw your account by £300, you're in trouble. It won't cover that. But up to £200, so let's say you overdraw your account by £100, you're fine. It's low interest, so it's a loan basically. So you would be paying interest on that. There would be a charge, but here they say low interest, so not a lot, and you would still have another £100 available if, so let's say you went to the store and you used your debit card, it would still accept it, even though technically your account is overdrawn. You could access that. It's basically a little credit line that's available to you. Okay? Number 3, the current rate of interest, or I would simply say rate of interest. The current interest rate for overdrafts is 6.7% APR. What is APR? What is APR? An APR is an annual percentage rate. So 6.7% APR, that's pretty low for a loan. That's actually really low, especially because you would normally not need this for an entire year. You might just use this for like a month or 2 months, maybe. So it would be pretty low, and it's not a large amount of money either. So the current interest rate for, now, you can't just automatically do this. You have to have permission. It has to be arranged in advance. It has to be authorized. You have to set up this overdraft protection in advance. It's not an automatic thing. It has to be authorized, or in American English, that S there changes to a Z. Okay? And that's what we would call this. In the US, we wouldn't just say a low interest overdraft, but we would say that you have overdraft protection. is the term I would use. That you have overdraft protection. Okay. And again, you have to apply for that. You have to be approved. You have to be authorized to use that. Okay, number 4. While your account is blank credit, there are no charges. So there are no charges if your account is positive, if your balance is positive, if you are in credit, if you are in credit. In the US, I would just say if you don't have a negative balance, or if your balance is positive, if your balance, your bank balance, if your balance is positive, means it's not negative, it's not negative, it's not a negative balance, it's a positive balance. You have more than zero. Okay, if your balance is positive, there are no charges. It's free. There's no, uh, there is no monthly fee or account maintenance fee that's being applied. Okay. All right. Number 5. If your account is overdrawn, charges may apply. Charges may apply means charges may be added. Um, if something may apply means that if certain conditions are met, then this will happen. Charges may apply. Charges may be added to your account. So if your account is overdrawn, if your balance is negative, you may have to pay a penalty, a fee, which is simply called an overdraft fee. Okay, very simple. Okay, the next couple of questions are connected here. Notice they have the dots here and the dots here. So this is basically one sentence. Okay, when you acknowledge receipt of your new debit card, so they send you a new debit card in the mail, and when you acknowledge, when you say, oh yes, I received it, you will be sent a PIN, which is, as we talked about last time, that is a personal identification number. Okay. Um, Now I know, at least in Korea, um, when you receive, okay, let me back up. In the US, when you get a debit card, it will come through regular mail. Um, and then you would call a number and activate your card before you can use it. So you would have to call to activate the card. If it's a new account, normally at that time it would probably come with a PIN number on the letter, on the paper that the card is attached to, or on the phone system, you could change your PIN. In Korea, when I've done it here, when I've gone to the bank on the little touchpad, the little keypad at the bank, I've entered my PIN there, uh, and that creates the PIN. And I still want to say PIN number, which technically I don't need to say because the N stands for number, but it's a common thing to say PIN number. So you can normally, they will assign you a PIN, or you can change your PIN. You can make your own PIN. Now in Korea, what they do here, because um, it's a smaller geographic area and high population density, when I get credit cards here now, they usually deliver them. Normally, they deliver them by hand, and when uh, when the delivery person comes, I have to show them my ID card. They verify my date of birth, I might have to sign. That is the process of acknowledging receipt. And then the card is ready to use. Okay. Number 8, you will need to enter your PIN each time you use the card. That's a difference between a credit and a debit card. Normally on a debit card, you have to enter the PIN. Okay. And again, those systems are constantly changing. Sometimes now, most of the cards have a little electronic chip, um, a little electronic chip in the card, that little gold piece. Um, so you might not have to enter your PIN, or some of them require that chip and a PIN number. Um, and of course, from shopping and buying things, that those systems are different everywhere you go. At every store or restaurant, those are different. So you might have to enter a PIN. Number 9, two or more customers may apply for a joint account. Joint account. Normally, this would be like husband and wife, because they would normally, or a lot of times, share one bank account, so that both people would have access to make deposits, to make withdrawals, to use a credit card or a debit card attached to that account. And that's up to the couple. Many couples have joint accounts. Some people prefer to keep separate bank accounts. It just depends on the person. I actually have a joint account with my sister because I'm in Korea and it's more difficult for me to do banking in the US. Some things I can do, they have a smartphone app. Some things I can do online, but there are times when maybe I receive a check in the mail in the US and I want her to be able to deposit it for me or to do something with it, or if I need to make a payment in the US, I want her to be able to help me with that. So we actually have a joint account. It's my account, but my sister is authorized, basically, to sign checks, and I trust her. She's not going to steal my money. So on the check here, like we talked about last time, there's my name and my sister's name. That's her married name. Um, and it's just a regular checking account, except now for the signature, I can sign or she can sign. This is, it's just for convenience so that if I need to make a payment or something, she can help me with that. She can do it. So she has some of my paper checks um, at her house, and so if I'm not able to do something online, then she might be able to help me with that. Okay. Normally it's like husband and wife, but because I'm overseas, it's we do that for convenience. Okay, number 10. Current account holders. An account holder is a person who has an account. You own an account. You have an account at the bank. You're an account holder. And that's normally one word, account holder, single word, no space. Current account holders may apply for a Grimley's credit card. So if you've opened a bank account, you are eligible. You are eligible. Eli- I can't figure out how to spell it. You are eligible. There, I think that's right. You are eligible to apply for a Grimley's credit card. This means you have It's possible. You have the right, the ability to apply for a credit card. Same thing here. Normally, if you want a credit card from Shinhan Bank, you need to have an account at Shinhan Bank. Number 11, credit cards will be issued if you're rich. No, if you have money, not necessarily, but subject to status. Subject to basically means depending on. They will base their decision on this. Depending on status, um, in the US, the term or the phrase we would usually use there is subject to credit approval. So you have a credit, basically a credit rating, um, which depends on your payment history, your amount of income, also your amount of debt, your payment history with credit cards or loans. And they will look at that before they give you a credit card and say, well, yes, we can trust you. Or no, you have a bad credit history, so we're not going to give you a credit card. So that's subject to status, your basically your banking history. In the US, we'd say subject to, that's probably a better, let me do it this way. We would say subject to credit approval. If your credit is approved, if it's good enough, you will get the card. Or we could say depending on your credit rating, or it does depend on your credit rating. This is the phrase that banks would use. That's the term you would see, subject to credit approval. Okay. And that's whether you're applying at the bank or if you're applying for a credit card online. Um, that's how that would work. Number 12, you may close your account at any time. You do not have to keep your account open. It's your money, it's your account. You can close it whenever you want. And unless it's, there are some like long-term savings accounts that earn higher interest. Those type of accounts, if you close them early, there may be like an early withdrawal penalty. Okay. If because the agreement is the terms of the account might be that you have a certain amount of money and you're keeping it in the account for a year, 3 years, 5 years, you earn higher interest. If you take that money out early, then there may be a penalty for that, a fine, basically, because you have not followed the terms of the agreement. It is your money. You can withdraw it, but you may pay some penalty for doing that. Okay, hopefully those were pretty simple. I think they were, hopefully. Remember, on Monday, we will have our first quiz. This is an online exam, okay, which means that I will send you the exam at our regular class time on Monday. I will send you the exam and you will complete it and then send it back to me by the deadline, okay? Now, this is an online exam, of course, and so we're not in a classroom. So to make sure that you are the person taking the exam, we will use Zoom. Okay, so you will need to sign in to Zoom with your camera on during the exam so that I can see you. Okay, microphones will be off because I don't want the background noise because then everybody would hear that. So microphones off, you'll be muted, but your cameras will need to be on. So you will have your camera on, and then you'll be taking the exam on your computer. Okay. Now, because it's online, I can't see everything that you're doing. Um, so some people may have, some paper, some notes, a book. They may have, uh, you know, uh, their phone with, they could look up a word or something. So it's possible for people to do that. So to make it fair for everybody, it will be an open book and open notes exam, which means that you are free to look at your papers, at your notes. You can make a study guide. Um, the thing is, the exam will be long enough and difficult enough that you will not have time to look up every question. So it's still important for you to be familiar with and comfortable with the material to actually study before the test. You will not have, there will be a time limit of our regular class time. So you will not have the ability to look up every question or every word or every term. You won't have time to go back and listen to a YouTube video. So you will need to be prepared before the exam starts, and you'll need to be familiar with and comfortable with all of the material. But if you want to make a study guide, some notes, uh, you can do that. Okay. And everybody has the ability to do that. Now, you may not talk to other people. You cannot call a friend or have a friend do it for you. Um, but uh, you can use your notes and things. Okay. All right, guys. That's it for today. So have a great weekend. Good luck with your preparations for the exam, and I will see you on Zoom on Monday afternoon. Have a great weekend.